Hey everybody, this is Abdel here with Ratio Trading. Today is December the 2nd, 2013, and last video I actually got a lot of feedback about the audio quality, and in looking back I realized that there was some overlapping issues, and I think they've been resolved. Hopefully they don't happen with this video and the videos to come. So I kind of want to slowly recap a little bit of what I talked about in the last video, which was Apple. You can see Apple, including today, has rallied to new highs of the year. It did come down, and not surprisingly, actually. Again, if we use our fib tool here, let's change to our fib tool and swing low. Last point of where it started up to the high, right? Then we had some consolidation right to that 1414. Do you see that right there? So as you can see, as the market started to break above this high here, let me extend this to the right so you can see it. You can see it broke through the high. Immediate thought process is what? 70% chance we're going to attain that 127 right there. So the next day, boom, move up to 555. So towards the end of the day here, you know, there are people as they were watching this close buying calls for 555. That's a good strategy, actually, and you can actually do pretty well on that, especially when you see a lot of momentum to the upside. And then after the 127, we kind of closed there for the day. I was interested to see what happened next, and you can see the following day, which is today, 564 hits that 1414 to the almost to the tick, comes down and starts pulling back. Now, I want to reiterate the importance of this level here, okay? I'm only going over this again mostly because the last video didn't work. So when we take a look at the monthly chart here, this is what we're looking at. This is the big picture here, and this is what it is. It's a market that, again, from the low, this is '09, to the high, this is last year, right? Significant move, comes down, hits the 50% retracement, right? So again, let's draw it out. Boom, hits the 50% retracement. We are buyers at this area, not full position, but we get something. Take off some profits, and now what's happening is the market has rallied up to the point here of this. So if we remove this one just to make it easier on the eyes, oops, let's do it again. From the high down to the low here, right? The market has rallied into that 50% to 618 retracement. So I just measured from the high here down to the low, and you can see right in that range, right? Right in this area right here, that's where the market is. So what are we looking for? We're looking to see if the same thing that happened here, right, at this 50% happens here, meaning does the market consolidate, which it's spent some time doing here? Does it reverse and move back down, or does it say, no, we're stronger than this little force field, if you want to call it, and we're going to head back up to retest the highs? We don't know the answer to that yet, okay? It is impossible for us to answer that. What we have to do at this point is really just watch. And for me, as a fib trader, I am not a buyer of Apple at this point, right? I would not buy Apple for some long-term gains at this point, despite how I may feel about them selling phones or tablets or any of that stuff, right? Even if I'm optimistic on those things from a personal perspective, the charts are telling me something else, and the charts are telling me stay cautious and watch this area. And again, just like we've seen in the past with Apple and any market, right? This is what happened in '06. Rally up, comes down, just like it's happened here, right? Rallies back up, and what happens when it rallies back up? It doesn't have enough strength to take out the highs and ends up falling down. You look back here, this is 98 up until 2000. Similar scenario, right? Goes up, low to high, comes down, tries to get back up, doesn't have enough strength. This is a hard crash here. So Apple is not immune, like all markets are, or any stock, to these levels. And you have to be cautious here to see what ends up happening, because longer term, it's going to be interesting to see. Now, if it is able to break through, and I've said this before, if it manages to break through 600 on the monthly chart and close above it, then I'm very optimistic that it'll get back to highs. But that is going to be a difficult challenge between now and probably the next few months. So watch this area carefully. We'll see what happens, and then we'll go from there. Many of you are also asking for an update on Tesla. I'm still watching it here. I started nibbling a little bit, when it came down to about 116. I am looking to see if it's going to come lower. I'd like it to come lower, obviously, as I'm looking. I'd love to see it kind of come down into the lower 100s, into the 105, low 100s, basically. I'd like to see that. Obviously, if it doesn't happen, it doesn't happen. But I would like to see that because I'd like to buy some more. And you can see on the daily chart here, the market's come down and consolidated for some time, popped up for a couple days, came down today. Next week or so is going to tell us a lot. If it takes out these lows, we're probably going to get into that area where we want to be buyers. All right, so watch for that as well. The other market that I've been getting a lot of questions about is gold. I've been watching gold here very, very closely. You can see it's kind of double bottoming here, if you want to call it. It's not very nice. It's kind of been jittering, but this is kind of a double bottom. When you look at the monthly chart, this is a very interesting area here. This is truly a double bottom here. And you can see from the last swing high here up to that swing low, up to this high, you can see it came right into that 50 to 618 area. It's bounced up. It's now retesting. That's, if you're long gold, you're probably worried at this point, because if it takes out these lows with any strength, it could really see a dramatic drop down into 900s, or at least 1,000 in my opinion. Again, if we let's remove this for a second and just draw a fib from the last high down to this low, you can see right here, this is a minor retracement, right? Minor retracements tell us a lot. They mean that there's weakness. It means that there's weakness and there's strength in the momentum of the move, and in this case, that move is to the downside. So if it takes out this low, 120, if it takes out this low and closes below it on the monthly, 127 is very likely. A 1-to-1 move is going to put it way lower than that. It's going to put it, I think, around that 925 level. Oh, I'm sorry, even lower, 840. So that's a possibility, and you can see right that area right here. There's a lot of previous structure support at this area. So if it takes out this lows, it's not going to be good for those who are looking to be long here. Hard to say at this point. Now, I pulled in the relative strength index, or the RSI as it's called, and you can see here that that this double bottom is being met with some divergence right here, right? So what it's suggesting is that despite it retesting these lows, you see the RSI here was lower than it is here. What that generally means is that there's exhaustion on the selling side. It's not it's moving upwards, so that it's indicating that there might be buyers at this level. So I'm watching here. I need to see something a little bit more positive, probably on the weekly, to feel good about buying here. But if you're willing to take a little bit of a risk, you could be a buyer with a stop below this low, give it some breathing room, and you might end up being a buyer of lows with a move back up. It's not a trade I'm going to do yet. I need to see something more positive, like a reversal candle at the very least. But I'm watching here because of this in general is telling me that there could be a reversal, but the fact that it bounced up and now it's coming back down does not make it as nearly as strong of a case. All right? Hope that helps. One last thing. We are having a 20% discount up until tonight at midnight on both of these programs. The beginner program for one night, which is $197, the advanced program, which is $497, 20% off each. One is about 4 hours. The beginning is about 4 hours, includes a single trade setup and obviously some other things there. This is much longer. It's close to 10 hours of material, lots of trade setups, lots of money management techniques. Really good if you have been trading for a while and you're interested in learning a lot more about how to trade fibs properly. So grab those, and we'll see you guys next time.